Hi traders, it's Ben Ngoo. Welcome back to my YouTube channel. Traders go through constant loop of looking for strategies that will help them get funded, but a lot of traders actually go through it the wrong way. Now in this video, I'm going to show traders how to get funded, stay funded, and consistently make profits from these funding companies and even also your live accounts. Before we get into this video, smash that like button, hit that subscribe to support the growth of this channel. Now let's get into it while I show you guys what I'm talking about. Now, traders focus on the wrong thing. As much as being funded, staying funded, and consistently making profits from these funding companies, in fact, being a profitable trader all in general has to do heavily on your strategy. Strategy alone cannot just make you a profitable trader. Now, even if you are giving the best strategy to like a trader who can't even like manage his psychology or his emotions, still wouldn't make that strategy work. So that's just where it is. So a lot of traders actually focus on the wrong thing. And one thing you need to realize is even the best of traders can actually work with strategies that are not really that great. As long as it's positive, it could give you um, positive returns at the end of every month or 3 months or a quarter, however you like to see it, then most likely the strategy is actually good. Now, a lot of traders are trading outside, a lot of traders in the trading space in general actually have very decent strategy, very good strategy, but the execution, the way they use it is actually the problem. So now I'm going to break down 5 things I think traders need to do and need to learn so as to be better traders themselves and be consistently profitable, especially when you are trying to be a funded trader. So the first thing I'm going to talk about is having a systematic approach. As much as your strategy is very important, having a systematic approach is very, very important. Now, let me give you an example. Let me write this down here. So this is like let this be my blank canvas. So let me just write this down here. Having a systematic approach to trading. Having a systematic approach. Oops, yeah. So this is the first thing I'll talk about. Now, what does this mean? I see a lot of traders, especially newbies, ones that struggle. They'll be like, I am very dynamic. When price goes up, I buy. When it goes down, I sell. I know when to change my bias, blah, blah, blah. True. You need to know when to change your bias. You need to know when to go in opposite direction if your initial analysis is actually not correct. But having a systematic approach actually has to do with coming in the charts every day and knowing exactly what you're looking for. So for example, when I come to the charts every day, I know exactly what I'm looking for. I just need about 1 minute on the charts and I know I'm not going to see a trade today. Like looking at today, I knew if I was going to see a trade, it was going to be New York. So I didn't even bother looking at the chart during London session. And I was actually right. Looking at New York now, I think I see something cooking, but it depends. The price doesn't get to my point of interest, I'm not going to take the trade. So that's just where it is, having a systematic approach. And when you have a systematic approach, you're able to know if something is actually going wrong with your system. You're able to just note things down. When you journal, you know that, okay, this is not working. My risk reward needs to be changed. My win rate is bad. This doesn't suit me. Having a systematic approach is actually going to help you see all that. But if you look at different things every day, it's difficult. For example, you want to take entries, you're looking at engulfing, you're looking at liquidity pools, you're looking at this, you're looking at that, you're looking at fair value gaps. It's difficult, except you're going to document it that, okay, for each trade, if this is my entry, this doesn't work well, this doesn't work well, this works well. You're able to actually take out the things that doesn't work and leave the things that actually work. So that's it. So the second thing I'll talk about is trading less. Now, this is very, very important when you want to get funded or when you're trading when you're trading for these funding companies. So the thing is, when you trade less, it helps you overall. It helps you eliminate losses. So there are some periods where you would have taken countless losses, but because you trade less, you just like few percentages down. Let me give you an example. Imagine two traders having similar system. One trades on a slightly lower time frame, so it gets more opportunities, and the other trades on a slightly higher time frames, less opportunities. And one took about, they are both in losing streaks, and one is about, let's say in drawdown, let's say that one has taken like 9 losses in a row, and the other has taken like 3 losses in a row. Psychologically, it's going to be easy on that trader that's taking 3 losses in a row compared to that that's taking 9 losses in a row. So that's just where it is. So when you trade less, it's easier for you to come back when you're having a losing streak. You're able to go back and look at things and see how it works. That's just where it is. Not you trying to capture every opportunity you see in the market. You understand? A lot of traders just want to trade. I need to understand that this market actually finds a way to average itself. It averages itself because it takes so many trades doesn't necessarily mean you will make way more than others that trade less. In fact, from statistics of prop firms, you realize that those that actually trade less, few trades in a week, actually make way more overall than those that actually take multiple trades in a week. That's just where the market works. Okay. So the third thing I'm actually going to talk about is focus on low gains. Okay. Focus on low gains. Now, a lot of traders are so eager to make that 15%, 20%, 30% a month. And it's actually not, it doesn't work that way. It's not like that. Because you're trying to force the market to give you is how do I put it now? What's actually not real, what is not realistic. Okay. Little gains add up over time. 2%, 3%, 4% in a month. It's a lot. It's just probably because you are trading a very, very small account. When you trade a large account, a big account, you realize that these low gains actually help in the long run. You take 2 trades in a week or 1 trade in a week, you make your 2%, 3%, and you're done to your profit split date. You see, if you follow that approach, you keep making profits every week, or every payout date. Let us put it that way. That's how I trade, and that's how I've been able to keep making profits over and over and over. So the fourth thing I'll talk about is when you are focusing on a strategy or when you are trying to trade a particular strategy, focus on high risk to reward. Now, what does that mean is there are a lot of traders that can actually trade a 1-to-3, a 1-to-1 rather, and they are fine with it. But on average, most traders psychologically not be easy for them trading a 1-to-1 because if you lose this trade, you're on a losing streak with 3 trades. You have to like win 4 in a row. It's not easy. It's not easy winning 4 trades in a row. Forget what you see on social media, on YouTube. It's not easy. Okay, you could win here, lose here, win here, lose here, win here, lose here. But if you have a very good risk to reward, it eventually puts you up in profits. Okay, most traders you see on the internet, outside, wherever you are, most traders actually average about 40-50% win rate. Very, very good 60% win rate on average. You understand? I'm not looking at time periods. Now there are time periods where you could have like 80, 90, you could even win all your entire trades. No, I'm looking at average for the entire year. It's not easy winning all your trades. You understand? So you really want to have a very good risk to reward. So let me just put it down here. Have a good RR. You really want to have a good risk to reward. This will be your shield when things are actually going bad. So the last thing I'll talk about is backtesting. As much as we see this everywhere, a lot of traders don't pay attention to it because they are so lazy to back. I'm also lazy to backtest, but I know my system very well. I've actually backtested so much. In fact, I backtest way more than I trade. As much as I'm still very lazy in backtesting, you need to backtest. You need to have that confidence and see how your system has done in the last few years, in the last few months. No, years. You understand? You need to know if this system actually works well. That's why it's very, very important for you to backtest. Just keep backtesting. See what works, see what doesn't work. You can't be trading a system where you've not backtested at least 2 years of data. Like, what do you know you're trading there? You don't know anything about that system. You're just going to keep, the market will teach you along the way. So it's good to backtest, learn from previous experience, then use it in your day-to-day trading. Understand? If you follow these simple approaches, these simple steps, having a systematic approach, trading less, focusing on low gains, having a good RR, and backtesting, you realize that your trading is actually going to step up. So I hope I've actually been able to like share some lights on this particular topic. So I hope that's it for now. If you guys want to follow some of my trades, you can actually check the link in the Telegram, my Telegram link rather in this video description, and I'll pin it in the comment section. So have a good day, everyone. Bye for now.